Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have your Bitcoin/cryptocurrency update for January the 31st. Before I jump into the content for this video, please do me a huge favor. Go ahead and hit the thumbs up button on the video. Don't forget to subscribe to the channel, and don't forget to click that bell icon to get notifications when I release new updates. So it's been a really interesting week for Bitcoin, and obviously a lot of people have gotten super duper bullish, whereas some people have... well, not many people really have gotten bearish, but a lot of people have went full stupid on the bull side. So let's talk about what's going on in the market. Let's look at some charts and let's try to take a rational look at what's actually happening and what might come next. Before I jump into the charts, though, one thing I want to give you guys a heads up on is I saw this today on Twitter, and this is a little bit startling. So Kraken Security Labs actually found an exploit in the Trezor wallets, and they were able to hack, in just 15 minutes, they were able to hack Trezor's wallets and access crypto on those wallets. So you may want to do some research on that and read up on it. This is Trezor's response here. If I remember, I'll put a link to this response down below the video. But yeah, this is a pretty big deal, okay? This is one of the problems with cryptocurrency. It's one of the problems with the people that, have their blinders on and they're like, oh, this is going mainstream soon and all this kind of stuff. I mean, can you imagine having, let's say your life savings on a Trezor? I understand that's not really on a Trezor. It's on the blockchain. The Trezor is just a way to access it. But can you imagine having to keep up with that, right? Can you imagine your house burning down and you losing that? Or can you imagine losing the key? I mean, we're just so far away from mainstream adoption right now. And I'm not saying that it won't ever happen, but we're not even close, right? If you want to use the internet analogy, it's like 1980s internet, nowhere near mainstream. Okay, so again, I'll try to remember to put a link to this article so you guys can check this out. I use a Trezor myself, so this was pretty shocking to me. Okay, so the first chart that I want to take a look at, let's take a look at a Bitcoin chart, and let's go ahead and start on the weekly level, and we'll work our way down. So this is the weekly Bitcoin chart, and I'm going to take the 50 moving average off. Also going to take the 200 moving average off. They're not really relevant for right now. We can put the 21 on there, but again, I think the 19 is a better average to look at. It's also a little bit lower. You can see here that when it broke above the 19, had a nice bullish retest and up it went. So not really worth talking about because we're so far off of it. What I would like to see is price come back down to that level and hold as support if I'm going to stay bullish. Okay. There's people, on Twitter, there's people that comment on YouTube, there's people on Facebook who all think that, this thing is just going to keep going straight up. And guys, I don't know how many times people are going to have to get burned before they learn the lesson that markets don't move in straight lines. Even if we've started a new bull run, bull markets do not go straight up. The only bull markets that go straight up are blow off tops. Okay. So for example, back here, we had this huge blow off top where basically over the course of 3 weeks, Bitcoin went up from $7,500 to almost $14,000, almost doubled in 3 weeks. But what happened after that? Massive 50% pullback, okay? Same thing in 2017. There was a period of about 3 to 4 weeks at the end of the year where Bitcoin just went completely parabolic, went up from $5,000 or $6,000 all the way up to 20 grand. But what happened after that? A year-long bear market. During most bull markets, price is moving up fairly steadily and it's having pullbacks. It moves up, pullback, move up, pullback, right? If you look at 2017 as an example, because a lot of people, either they came in after 2017 because of all the hype, or they just simply forgot what 2017 was like and they keep thinking it was all like this blow off top. And this was a very isolated period. Most of the bull market was not like that. Most of the bull market was more like this. You moved up a few weeks, then you had a nice correction. Moved up a few weeks, then you have a nice correction. And normally this would correct back down to the 61.8 fib. You'd move up, like even this move here from April, okay? It bottomed in April at $900 and then it moved up to $3,000. Then it pulled back to roughly $1,758, right? Big move up, big pullback. Big move up, big pullback, over and over. So this idiotic talk about, we're going to 15, 16,000, right? Guys, not impossible, highly unlikely that we do that without a pullback, okay? Highly unlikely. If we look at the weekly RSI right now, it's peaking outside of this box. That is a very good indicator that we could be in a bull market, right? But the week doesn't close for 2 days, and today is the monthly close. So we don't know what's going to happen once January closes. The CME contracts are expiring today as well. From my understanding, I'm not an expert on the CME, but that's what I was told. So that could have some impact on price. We'll have to wait and see. Okay. But anyway, that's the weekly. If you want to be bearish, you want to see this tuck back down inside this box. If you want to be bullish, it's okay if it tucks back down inside the box. It's not that big of a deal. It could still find support, right, on the 19-week moving average. And there's other supports we're going to talk about as well in the smaller time frames. Okay. So I do suspect that probably will come back down inside that box. If not this week, probably next week. Okay. If we look at a 3-day chart, been playing around with this thing a little bit, and so there's a lot of lines on it. I'll explain what all of them are so that it's not just spaghetti in your face. So first things first, obviously this is that fractal. Again, I want to be very clear. I do not think this is going to happen. I just have it on there more for my own reference to kind of keep an eye on it. This is basically the fractal from back here in August to the bottom here in December. Okay, so if it plays out again, it would bottom out somewhere around $3,600, which is interesting because there are CME gaps down at that level. So not impossible, but you know, I don't think it's very likely. The one thing I find interesting about it is if you look at it, this thing shows that it would be dumping down around $4,800, and then look where it pumps in April. What happens in May? The halving. What historically happens with Bitcoin? It pumps before the halving, and then what most people forget about is it dumps after the halving. Right? Everybody always leaves that part out. They're like, oh, the halving starts off the bull market. That's not actually what happens. We'll talk about that in a few minutes, okay? But that's the fractal. Obviously, this is our downward sloping trend line on a non-log chart. On a log chart, it looks like that, okay? Not really watching it that much because we're pretty far off of it. I'd be more interested if it comes back close to it, then I would start paying attention to it. On the RSI, this was our bear market box. We have obviously broke out of it, okay? Been outside of it, looks like a bullish retest. What I noticed was this red line here, from this point here to this point here. You know, we had support, then resistance. Almost looks like resistance and almost looks like it got rejected here. So that's one line I'm keeping an eye on. The other thing I'm keeping an eye on, and I don't know if I trust this yet. It's just something I'm kind of contemplating. When you look at this red box, it's like, oh, it's easy to trust it. Yeah, but it wasn't way back here. When I first drew it, we didn't know if it was going to be legit or not. So this green box is the same way. I don't know if this is legit. I have to wait until it gets more touches. But essentially, these green lines are a parallel channel, okay, from this point here to this point here. So that was obviously resistance, support, and look here, it's a perfect touch of resistance here. And then on the bottom, you have support, support, basically support. So I think it's legit, but I'd like to see some more touches before I get too confident in it. If it is legit, it's possible that we're going to go back down to the middle of the channel down here. Or if this was a big fake out, we could actually go back to the bottom of the channel as well. Okay? So I'm going to keep an eye on that. On the daily chart for Bitcoin, let's look at a Coinbase chart, because that's spot. So this is the Coinbase chart. Obviously, nothing has changed from a couple days ago where I was watching this, upward sloping channel. I still think it needs to pull back. And let me draw my other channel on here so you know what I'm talking about in case you missed that video. Essentially, we have these two channels, right? They look something like this. And what I'd like to see is its price come back down. This channel here is awful steep. It's actually parabolic. The more you look at it, the easier it is to tell it's parabolic. So it probably will fall at the bottom of it. But I had the channel drawn a little differently the other day. I had it drawn more like this. In fact, let me just draw a new channel so that I can get it on there the way I had it. Okay. So we had it like this, okay? Essentially, this upward sloping channel, and we have this area where these 2 points converged right around $7,800. And what I was saying was I'd like to see price come back down to that level and hold that level if I want to be a bull, right, before further upside. Now, the sketchy part about that is that would require it to break back underneath its 200 moving average. So I'm not turning back into a bear. I want to be very clear. Right now I'm neutral. I'm still in my long positions. I told you guys in the last video I expected to hold those until they either kept going up or until I got stopped out. So I'm sticking to that plan. I had a really nice trade on Litecoin. I took a Litecoin long at 58.71. Still in that position as well. Probably will take some profits on it today. Took some other positions I'll talk about as well a little bit later. But essentially, I'm neutral. Like on the big picture stuff, I'm fairly neutral until I have more direction and we know for sure which way the market is going. But on the smaller time frames, whether you're bullish or whether you're bearish, I do think this is due for a pullback, right? And then basically what we'll have to see is it going to be a pullback or is it going to be a dump? Is it going to be like a healthy pullback in an uptrend, or is this one big fake out and it's actually getting ready to pull, something like this back here? Okay. When we look at RSI, it looks very, very toppy. You have a double top back here. Okay. And I don't know where that was. I'd say it was probably 8,400. Yeah. So basically right here, no, it was 9,200. Sorry. Got to 9,200 and then it did dump down to 8,200. And now we have another double top right here. You can see it. It's not yet confirmed, because even though it's broke the neckline, this daily candle has not closed. So if today suddenly price pumps back up, this will just curl back up, and in hindsight, it won't even look like it came down. It'll just be pointing upward. Okay, but right now, if it closes underneath this level right around 67 RSI, that's going to be another double top, and we can see what happened when we got the last double top. But more importantly, it's going to start to put in a bigger macro double top. Okay, that's very toppy looking. The other thing that's concerning about this daily RSI is when you're in a bull market, okay, you want to see overbought RSI. Now that sounds a little bit counterintuitive because people don't understand RSI and they're like, oh no, overbought's bad. It means it's going down. No, it doesn't. Okay, that's not what it means. If you look in a bull market, you get overbought RSI and you tend to stay overbought, right? Look at this. This thing actually reached 87 RSI in April, on April 2nd. Yet it went up from $5,000 to $14,000, right? Just stayed overbought. And you can see that when it had pullbacks, it would pull back to around 50 to 55 RSI and then just bam, right back into overbought. Pull back and bam, right back into overbought. On the flip side, if you look at a bear market, RSI, like in 2018, it just stayed inside the channel. It barely ever got outside of the 70, right? The one time it did was this little blip in the summer of 2018 and then tucked right back inside. That's because in a bear market, you almost never get overbought, okay? You get oversold, but you do not get overbought. So the fact that we had this great big pump, I don't know if you guys realize this, but we've now pumped 47% from December's low, yet we never made it into the overbought territory. And both times we tried to get overbought, RSI put in double tops, okay? Or at least it put in a double top here and it's trying to put in a double top here. We don't know for sure if that's going to happen yet. That makes me lean toward the idea that this was one huge short squeeze, okay? That could be my bearish bias, but when I look at that objectively, that's what that looks like. Not being able to get into overbought and turning down every time we get up there, it's not great, right? It's not great for Bitcoin. So that's the daily chart. Now, what I want to do is I want to look at, we're going to look at a BLX chart in just a minute, but I want to look at a CME chart because the CME chart looks terrible, guys. Okay. The first thing let's look at these gaps. We have these three gaps that I talked about, okay, in past videos. There's a gap down here at 76.75. There's a gap at 85.40, and there's a gap at 91.20, okay? Those are all bearish gaps. There are other gaps. People are going to say this. They always do. What about the one at 11,800? Yes, there's a gap up there at 11,800, right up around this area here. Okay, but it's from back in August. If we want to talk about old gaps, we can go back here and talk about the gaps from 3,500 too. See it? There's your gap at $3,570. Okay, So yes, there are gaps way up there at 11.8. There are gaps way down there at 35.70, but these are the three gaps I care about right now. That looks bearish in nature, but the other thing that really concerns me about this CME chart is the volume. If we turn volume on, look at this. We've essentially had price just moving up, 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 while at the same time volume is just moving down, right? We're getting a bearish divergence in volume. We're also getting a triple bearish divergence, possibly even, let's look. RSI here is 80.56. RSI, okay, quadruple. We have 3 lower highs in RSI, while prices just continue to print higher high after higher high. So we've got this massive bearish divergence. We have this huge drop in volume, right? And we have price moving up. All that points towards signs of a correction, right? And again, we'll have to see, is it a correction or it's just cooling off from this really nice rally, or is this a fake out and this correction is actually the start of a huge dump, right? This is going to be the time where people find out, did they just buy the dip or were they catching falling knives and didn't know it? So if we go back to the daily Bitcoin chart and we look at Fibonacci levels, when you have a parabolic climb, it's very, very standard to retrace back down to at least the 61.8, which is down around $7,500 to $7,600. So again, we have all these things. We're inside this channel. It would be very cliche to come back down and test the bottom of this channel, okay? Depending on where we test it at. It could be that we test it very, very quickly, right? Down around 7,700, filling those CME gaps. Maybe we bounce right off of that. Maybe it tested over here in this area of convergence, right? We don't know where it's going to test it. We don't know if it will test it. But first thing we want to do is see if it gets to this level, what happens, right, at this midpoint. Breaks through it, it's more likely that it'll come down to the bottom of the channel. Then if it breaks through it, then it's more likely we come all the way down to the bottom of this channel, okay? So just a couple of scenarios on Bitcoin. Let's look at, I'm going to use a BitMEX chart just because it's a little bit cleaner. I don't have a bunch of lines on it. If we look at a 4-hour chart, what am I seeing here? On a 4-hour chart, we have basically this was old support flipped, old resistance flip support, old resistance flip support, old resistance flip support, old resistance flip support, and same thing up top there. Now, what you'll notice, let me squish this down, and I'm going to get rid of volume. Get rid of the 200 moving average because it's messing up my scale. This was the line that I was watching to see if it held. It did not hold as support. We came back down, bounced off of this old support right here. This was this morning while I was sleeping, and we came right back up to the top and tested this as resistance. And so far, if you look, price got rejected. Okay, bulls wanted to see this break back above 93.33. It didn't do it. It got rejected from 93.33. That's a bearish sign. If this level here can't hold, it's so fat. Let me make it skinny. Okay, yeah, it is 91.99. So if this level here can't hold this next time it's tested, if it's tested, then there's a good chance that we'll go down and test this next level of support, 8,900. If that one can't hold, guess what? The next level is down around 8,200. If that one can't hold, then the next one's down around 7,700, right? We just got to play it level by level. But again, this looked, pretty toppy right through here. So nothing shocking. It's not like catastrophic or anything. Right now, so far, it's just a pullback, okay? If we draw some Fibonacci levels, we're just going to look at the local move, not the whole move. But if we look at this local move from this pullback here to this high here, 38.2 would be $9,085. The 50 level would be 89.33, which is right around the support. And the 61.8 would be down here around 8,800, okay? So those are all levels that I want to keep an eye on. This may end up offering some type of support down in this area, okay? And some people watch a video like this and are like, well, you just named all these levels. Of course, you're going to be right because you named 15 different scenarios. Yeah, I'm not trying to be right. That's just it, guys. That's what always gets me about people that leave those types of comments. Like, I'm not trying to be right. I don't get paid being right or get paid for being wrong. I get paid for taking trades, and I get paid for proper risk management. So when I identify different levels of importance, when those levels are hit, I know, okay, this level looks like it's holding a support. I might want to take a long here. Or if that level is lost, I might say, hey, I want to take a short here and try to get down to the next level. So you'll often hear me say, I'm just trading at level to level. That's what that means, right? I don't need to be 100% correct, and I don't need to know exactly where price is going. I need to know which levels are important so I know which trades to take and when to close those trades. So that's what I'm watching for in the Bitcoin chart. That's what I'm watching on the CME chart. Now I want to zoom out and take a look at the BLX. So to do that, let me pull up another chart here. We'll just talk about this super quick. There's all kinds of fractals I could look at, but I don't want to talk about fractals a whole lot today. I just want to talk about one thing, and that's this idea that the halving kicks off these bull markets, and that if you're not in before the halving, you're screwed, right? This idea that people keep passing around, this pure FOMO. So if I remember correctly, the last halving happened on July 9th of 2016 for Bitcoin. So that would have been right there. You can obviously see that what happened after the halving was not a huge pump, okay? Yes, price went up after the halving, but guess what? Price was already moving up before the halving. Price had been moving up before the halving. It started moving up in January of 2015, right? And just moved all the way up. We're not doing that this time, okay? This was a year and a half before the halving. That's not what's happening this time. Doesn't mean we won't move up into the halving, but what I'm saying is you can't look at this past and say, okay, this is what's going to happen, because usually this is what happened and it's happening differently already this time. But even if you do believe that we're going to pump into the halving, look what happened to Bitcoin's price. It pumped, and then after the halving, it actually dumped 38%. It was a 38% pullback after the halving. Why? Because like any event, especially in crypto, it's buy the rumor, sell the news. Buy the rumor, sell the news. That's just what happens. So the bottom line is this. Just remember that, yes, price may pump, but price always in the past has had some type of retracement or some type of major correction after a parabolic move. So it really just comes down to being patient and make sure that you're not chasing your entries, okay? And if you want to take a long position, I'm not saying you can't, but just make sure you're using... But just make sure that you're going to use a proper stop loss so that if it goes against you, you don't lose a ton of money. And as you can see here, this was the old high. When it did have this parabolic pump, it came back down and retested that old high, okay? And this, by the way, was November 2015, and this was August of 2016, so almost a year later. So when we look at this year, the halving right now, based on the hash rate and everything, looks like it's going to be May 12th. So it's going to be right there. So let's just say, for example, that maybe this thing pulls back to, I don't know, let's just say $8 grand or 7,800, right? This old high here. And then let's say it goes on this huge pump, pumps up to, let's say 11.5, because that's where my line went to, right? It would be very cliche to come back down and retest if this ends up being the high, this high over here. So it would look something like this. And if you get that, again, that kind of goes in line with what I was talking about a few days ago, where we'd have this down, up, down, which is an inverse head and shoulders. It would have a target up around 12 grand. And then it would be very, very cliche to come back down and retest the neckline of that head and shoulders, and that be the launch pad for the next bull market. Okay, so we could definitely get something like that. That's what I'm personally watching for. Let's talk about a few altcoins. First alt I'm going to talk about today. I'm not going to talk about all of them. I'm just going to go kind of quick. EOS. This is a really good example of why you don't want to FOMO into stuff. Yesterday EOS pumped. I think it was up like 10%. It was all up to $4.40. And obviously a lot of people were starting to get excited about EOS, like a lot of the alts. But look, guys, it's already dumped that same 10%. It actually dumped down to 401 today. And if you draw this downward sloping trend line, you can see that EOS is actually broke through that line. Look at that, right? So I'm pretty happy that some of these alts are starting to retrace some. It was starting to get pretty parabolic. And while it's not a good thing for people that are holding alts, it's not a good thing like, in the short term. And the long term, that's what you want to see. You want to see nice, climbs within, corrections basically in that climb. But me personally, I think EOS is still very possible that it's going to go back down and retest its 200-day moving average down around $3.31, if not lower. That was a very parabolic move. And again, we don't know if this was the top of the move or not, but if it retraces from there, it wouldn't shock me at all to go all the way back down, even down to $2.63 to $3, somewhere in that ballpark, somewhere in here, okay? Again, the signs were there on EOS. If you take a look, you can see that this is a daily chart, had bearish divergence coming in, and now it's trying to put in a double top at the same time. So looks pretty toppy, okay? If we take a look at Litecoin's kind of the same deal. It's looking pretty toppy. It looked very toppy the other day. Then I turned around and took a long because it suddenly tested this for support. If you guys are wondering about that, a couple days ago I said Litecoin looked toppy, and then you might have heard me mention earlier in this video that I took a long at 58.71. It's because of this right here, right? I did think it looked toppy right here. I did think it looked like it was trying to put in a double top, but things change quickly in this market. And when it came back down and tested the support and found support there, I jumped into a long position, a position that I'm still in. So right now I'm up on that trade right around 13%. I really should have sold it yesterday. I just wanted to be more patient to see if this trend was going to hold up or if we were going to, get a pullback. So I probably will take profits on that. I need to zoom in after I do the video, look at the smaller time frames, and find a good place to exit that trade. Okay. But Litecoin still, it is trying to put in this bearish divergence, right? It's not confirmed yet. It's trying to put in some tweezer tops, again, not confirmed yet. So looking good for a reversal. And if it does reverse there, okay, and I'm not saying it will, just saying it looks like it wants to. If it does reverse there and we draw some Fibonacci retracements, then again, I think we could be looking at a buy zone or a reload zone anywhere from down here at $43 all the way up to $48, right? If this is a bull market, okay? Now, these are all ifs. We don't know if it's a bull market. If this was a big fake out, then it'll probably take out these lows. But if it's a bull market, I'd be happy with the retracements of those zones. I'd be happy buying Litecoin there, okay? So 0x, I actually took a trade on it yesterday. It was a very small, what I call a nibble. What that means, it was less than, $1,000. I think I put $500 into it. Basically, no stop loss because it's such a small percentage of my portfolio. But what I'm watching for is I'm watching to see if it breaks up off of this 200-day moving average like a lot of the other alts. Got a feeling if Bitcoin dumps, it won't. It'll just come right back down and crash with Bitcoin. But again, small trade, not a big deal. I was up about 2.5%, but right now I'm down 1 or 2% on that. So we'll see how that plays out. I took a trade on Algo. Now this one was a day trade. So same thing. I was watching it. It was above the 200-day moving average, but I didn't want to get too carried away because I still am a little bit hesitant to say that we're in a bull market. So I just did a day trade in this one. Worked out really well for me. And essentially, guys, all I did was wait for it to close on the daily. And you can see it closed right here. It had bounced off its 200-day moving average. So I entered the trade. It closed at 0.2415. I actually got in at 0.2424. I sold at 0.2565. So for me personally, it looked like this, 0.2565. It's about a 2-hour trade. Made about little just under 6%. It was like 5.8%. Just a really, really simple trade to take. Okay. So me personally, my bread and butter is day trading. I got away from it these last couple of months because I just kept trying to catch this one giant, dump. And the reality is I just make a lot more money day trading. So I've kind of shifted back to my bread and butter. I took like 4 trades yesterday, and I just do much better with those. You've got to find a trading style that works for you personally. Some people are great day traders. Some people are great swing traders. Me personally, I like putting money into a day trade where I can put a little bit larger trade on the book and get in and out in a few hours and not have any stress about going to sleep with open positions and worrying about wicks and scam tails and all that kind of stuff. So yesterday was a pretty fun day. But I don't want anybody to get caught up in the euphoria. While I did turn bullish on the shorter picture a couple days ago, the market changes quickly, and I think that we're seeing a lot of toppy action, like I said. So I'm not really looking for longs at this point. I'm just going to kind of watch and see what happens. I'll probably stay in my Bitcoin long because the plan all along was to stay in it or get stopped out, right? And deep down, I want to get stopped out because that means the market's dumping. So we'll see how that plays out. If you really take a look at this chart, and let's say that you're not invested in Bitcoin and you don't care what's happening with Bitcoin, if you strictly go by the chart, we're still in a downtrend on the weekly, right? This did come up. It came all the way up to $9,574. So I did have a few people ask, hey, is this a bull market now because it broke 9,500? The answer is no. It has to close above 9,500, right? In fact, it has to close above $9,548.84. Put the lines back on here. Make this very, very simple. It has to close above this. Why? Because when you put this on a line chart, it's easier to see. That's the weekly high. If it closes anywhere under that and starts going back down, all this was a lower high on the macro level, which means we're still in a downtrend. The fact that we're outside the downward channel does not mean the downtrend is over, right? We could still be in a downtrend and the channel just be larger than what we thought it was, okay? And he puts us back on a candlestick chart. Yeah, look where it got rejected at. It got rejected right at that level, okay? So if you want to talk about a bull market, it needs to close above that yellow line. Until then, it's just a simple downtrend, okay? On the weekly, again, on the daily, we've been in an uptrend since December. That's different, right? But on a macro level, we have to wait for or you don't have to do anything, but I wait for the weekly to change course, right? Because I'm a position trader. I day trade, that's what I'm good at, and I position trade. And I try to swing trade, but I'm not near as good at it, okay? So keep an eye on this, because if it fails to break above that, like I said, it's a downtrend. It's probably going to go back down in the middle of this channel and probably make its way back to the bottom of this channel. Falls out of that, it's going to go down, probably test the top of this downward channel. And if it falls through that, it's probably going all the way back down to the bottom of the channel. Okay? Not necessarily at that exact point, but that's kind of what we're looking at. With all that being said, guys, please remember, I am literally some guy sitting in a spare bedroom, so nothing in this video is financial advice. Nothing in the video is trade advice. You should always do your own due diligence and seek out professional investment advice before making any type of investment in cryptocurrency. If you enjoyed the video, please be sure and give it a thumbs up. Don't forget to subscribe to the channel. Don't forget to click that bell icon for notifications. And of course, don't forget, you can check the description for links where you can follow me on Twitter, TradingView, where you can join my free Facebook group, and where you can join my trading course if you'd like to learn technical analysis and how to trade. This is James with Crypto Common Sense, reminding you to trade safe.